Meet Maya, a new payroll coordinator. It's her first payday, and she's facing a big challenge: mastering source deductions and remittances for the Canada Revenue Agency. Let's follow her journey. Understanding payroll, source deductions, and CRA remittances. Maya, your first big task is source deductions. They're mandatory amounts for CPP, EI, and income tax remitted to the CRA. All right, Maya, let's start with CPP. It's a retirement pension where both the employee and employer contribute equally up to an annual limit. Next, Daniel explains employment insurance, or EI. It's temporary income support, funded by both the company and its employees. Next, Daniel shows Maya how income tax works. It's a federal and provincial tax calculated based on an employee's income and the personal tax credits claimed on their TD1 forms. After subtracting CPP, EI, and income tax from the gross pay, Maya confirms the final net pay. It's a perfect match. Let's follow Maya as she sets up a new employee. Their gross monthly salary is $4,000 with standard deductions. Daniel shows Maya the CPP calculation for a $4,000 monthly salary, using the annual exemption and the 2025 rate. Next, Daniel explains employment insurance, using the current 1.66% rate. For income tax, Daniel points Maya to the CRA's online calculator, which considers federal and provincial brackets and TD1 credits. Let's calculate the total deductions. CPP is about $200, EI is $66,640, and income tax is around $500. That's a total of $766.40. So, net pay is $3,233.60. Maya learns that employers remit source deductions like CPP, EI, and income tax to the CRA on a regular schedule. Daniel explains remittance schedules are based on thresholds. For most small businesses, it's a monthly payment due by the 15th. Daniel explains that as a new business, they're a new remitter and must pay monthly for their first year. After that, they'll likely become a regular remitter, which is also a monthly schedule for most small businesses. Quarterly remitters have monthly withholdings under $3,000 and must be a CCPC with perfect compliance. Remittances are due quarterly on the 15th. Daniel explains that larger employers are on accelerated schedules, remitting semi-monthly or even the next day based on their payroll. Daniel explains that late remittances face penalties of 3 to 10% of the amount due. Repeated failures can even trigger a CRA audit. Now, Maya, let's remit through the CRA My Business account. Use online banking or pre-authorized debit and always keep detailed records. Daniel shares some best practices with Maya. Set a calendar, use certified software, and review CRA updates annually. So, what are the key takeaways for Maya? First, understand the core components: CPP, EI, and income tax. Then, ensure accurate calculations and timely remittances to stay compliant. To stay compliant, Maya uses key resources like the CRA's PDOC calculator, the T4001 Employer's Guide, and certified payroll software. Follow more insights, like, comment, and subscribe the channel.